Hello and welcome to Buy Africa, the show where we focus on investment opportunities around the continent. I'm Tshepo, Modiba, and thanks for joining me. Tonight, I'm joined by Mishnah Seth, Head of Frontier Strategies at Aluwani Capital Partners, joining us from Cape Town. Thank you for joining us, Mishnah. I'll kick off just, I guess, to get a broad sense of how you're looking at the environment.
Thank you for having me.
I'll just kick off trying to get a broad sense of how you see the environment for equity investors around the continent right now, given a very difficult couple years within African equity markets.
So you're correct. We've had a very difficult couple of years for equity investors on the continent. But the one thing that we take solace in is that valuations remain very attractive and actually look very attractive relative to the history of the and relative to global peers. So as an example, if we look at our key markets of Nigeria, even Kenya or Egypt, valuations are looking very attractive. The underlying businesses that are listed in these stock markets are trading on favorable valuations on bottom of the cycle earnings, which means that once we have an earnings recovery, that the markets or rather the companies should re-rate on the back of an earnings recovery as well as a re-rating. And I think the most important point to point out is that for any investor, that the diversification story for Africa still remains intact. So when you look at the correlation of a number of African markets relative to emerging market peers or even developed market or frontier market peers, the correlation is very low and in some cases negative, which points to the fact that diversification is very much intact when looking at the African markets. So from an equities market perspective, it's been a tough couple of years. But we are through the worst. So a lot of the bad news has been priced in. Structurally, we're seeing improvements in the underlying economies and valuations are very attractive. So we like to believe that we're closer to a bottom rather than a top with respect to the equities market.
That's an interesting perspective of where we are, Mishnah. If you had to, I guess, then differentiate across various types of businesses, which ones are better placed to do better both operationally going forward, and I guess just as importantly from an investment returns perspective?
The one thing we'll admit is that Africa is, it's a tough operating environment. There can be macro shocks, policy shocks, and the infrastructure development is not as robust as we require currently in a number of the countries. So, we feel that, if we look at businesses that are on the continent, businesses that do well or have done well through the cycle have been businesses that have had very strong and innovative management teams that have shown or have demonstrated the ability to create shareholder value through the cycle. And businesses that understand distribution. So because infrastructure is difficult and formal channels of distribution are not really there, businesses that understand informal channels of distribution and have geared their businesses towards those do very well, as well as businesses that understand or create confidence within their product and brand loyalty. So, if you look at Nigeria or, some of the smaller economies, Malawi, Uganda, even Kenya, and
that's a particularly interesting perspective of I guess the types of businesses that do well. Does that mean then in assessing those businesses that are likely to then do well operationally, that investors need to understand or spend time understanding management, understanding strategies, as you touched on, understanding distribution strategies, perhaps even more so than they would looking at more developed regions in the world.
Yes, I mean, that's very accurate. You know, particularly if you're investing on the equities markets, liquidity is very tight. So you have to have, or you have to adopt a buy and hold strategy with respect to your investments. You actually want to be invested in companies that can create value through the cycle, and where you are fairly comfortable with your ability to earn a return, over the medium term. I think the one thing that's very clear when investing on the continent is that you have to, particularly in the equities market, I guess, is that you have to avoid mistakes that result into a permanent impairment of capital. Therefore, you have to spend a lot of energy in trying to understand management, their ability to deliver value, strategy, the industries that the businesses are operating in, and if barriers of entry are low or high. But most importantly, when investing, it's the price that you're getting the asset. So, besides understanding the fundamentals and the quality and the dynamics of the businesses, you have to be very careful about the price that you're entering your positions, for in order for you to return or earn a decent medium to long term return from the companies.
So in a strange way, even though we're talking about listed businesses and investing in listed businesses, the way you think about the investment strategy then is probably quite similar to private equity.
Yes, it is, but you don't have the benefit of being able to do very long due diligences, so that you can understand the businesses inside out. Which is why I think it's, we feel at least it's important to partner with businesses that have very strong balance sheets and strong, strong operational know-how, as well as businesses that are fairly large in their, in their size. So they're either market leaders or, the top two or top three within the market. Because policy environment can be fairly, haphazard sometimes. You want to be strong businesses that have the ability to understand the policy environment and can also get involved in, structuring the policy environment in a country.
Okay. Broadly speaking then, is there a differential in terms of your approach or strategy at assessing the different regions and pockets of the continent? Do you look at Kenya any differently from how you would look at a Nigeria or how you'd look at a Senegal?
So, you have to take the macro picture into view. So, what is fiscal policy like? What is monetary policy like? What is the level of political risk that you're taking within the country? But from a bottom-up perspective, it's very important to have similar variables when you're comparing banks to banks or consumer stocks to consumer stocks. But you're very right. If each country has its own set of variables that drive growth, depending on where that economy is in its developmental cycle and where those companies are within their business cycle. So it's very important to understand those as you invest across the continent, because you invest of countries, whether it be East or West Africa.
Mishnah, you've given us a nice broad overview of how you think about investments or different companies around the continent. I'm actually curious to hear your current views on Nigeria being one of the largest markets on the continent, both where it is from an investment opportunity perspective, but your overall assessment of the market and the Nigerian economy.
Yeah, sure. I mean, the Nigerian market has come under significant pressure following the fall in the oil price that we saw towards the end of 2014, early 2015. And since then, we've seen government revenue come under pressure. We've seen foreign reserves come under significant pressure, which has put which has had an impact on economic growth and businesses operating in Nigeria. On the equity market, because of a drying up of FX liquidity, as well as the slowdown that we've seen in the underlying businesses, we've seen a significant pullback of the equities market. I think the economy is trying to readjust itself. So the government is trying to put policy in place to diversify the economy. But the big thing has to be on the FX liquidity side. And we've recently had a new policy or the introduction of a new FX window in Nigeria. I guess the big test will be once liquidity comes back fully, and if the market starts becoming a lot more transparent. So besides the fact that we've had commodity shock, we've had a change in political party in Nigeria over the last 2 or 3 years, the big issue has also been a lack of confidence, both internally by the locals, but also foreign investors. And I think for that to return, it's important to see policy stability, particularly on the macro, on the monetary side, as well as improvements with respect to policy on the fiscal side.
All right, perfect. Let's leave it there. Thanks to my guest, Mishnah Seth, Head of Frontier Strategy at Aluwani Capital Partners. That's all from Buy Africa this week. Remember to follow me on Twitter. That's at Modiba_Tshepo. And send us your thoughts about the show using the hashtag Buy Africa. For myself and the team, goodbye.